Good evening, traders. This is a market analysis for 15th of July 2022. Due to technical glitches, the last 2 days I wasn't able to share the market view. And in the last recording that I shared, this was the most crucial price band that I had specified where we saw intensified selling and we continued to sell off in the last couple of days, getting excellent trades into expiry and closing expiry on a wonderful note. And time to time, I was sharing on the Telegram channel about how the context is now into a sell on rise markets until we hit 15,840 levels to the downside, and we should not be buying into the dips or buying into the upmost because that can prove uh, to be the wrong decision for a trader. And even order flow suggested the same. In fact, at 105 today, if I look at my order flow charts, this is where the most intense selling had started today at 120. It was weak selling with buyers trying to push up the prices throughout the day till the first half, giving signs that longs may reign, but the context was bearish. We already had big sellers on higher time frame selling to the upside right since the last couple of days. So as long as those levels were not cleared, it was clearly a sell on rise market as I had suggested. And this was the candle. Again, these settings, the settings that you see are my proprietary settings. You see is where sellers had finally hit the ball home. They put the final coffin in the heads of the bulls, and you can see how the down move came after that. For tomorrow, let us have a look at what kind of market are we in right now. Is this the beginning of a full-fledged selling? Are we once again into a clear downtrend, or are we about to break the lows of 15,200? Would be the major question in the minds of most retail traders. In my opinion, as per the analysis that I do as per volume analytics tells otherwise, right now we are in a range bound context. We are seeing some big sellers, institutional sellers selling to the highs, but again, always understand that there is no one single player who runs the markets. Market consists of multiple large players, and at any point of time, at every point of time in the markets, buyers will be trying to take control from the sellers and sellers will be trying to take control from the buyers at important reference areas. And if we look at the market right now, sure, there are sellers to the upside, and the place where maximum selling occurred is 15,950 to 16,180 for now. And this is again on a positional basis, folks. This is not on an intraday basis. From a short term, this is how the market context looks. Let's go to 15 minutes time frame. And to the downside, we still have a few large buyers present. Their reference is 15,840 to 15,670. Let's also have that zone plotted. Now, there are no signs so far that even within this down move, these buyers have exited their positions. These buyers are still holding on to their longs. So this is not an area where I would try to attempt fresh shorts, at least on a positional basis. In fact, until we clear these grounds, two price bands, two wide price bands, we are in a choppy context. What I would look for in this situation is to see fresh shorts that are being added more than these longs, or these longs exiting their positions, unwinding their positions. Either that should happen, or if I have to take a long trade here on a positional basis, I would wait for to see reinforced buying, to see longs defending their area, buying areas, and fresh longs that come in which are more than these shorts that are positioned above. Until either of these two scenarios happen, I would not be taking any positional trades, positional directional trades, I mean, in the coming days, since these are the ranges which are established, and it would rather be a better idea to play the extreme ends of the ranges, like sell at the extreme end of the seller's band and buy at the dips for now, but not trade with an expectation that we can see a range expansion and we would be breaking 16,250 or 15,200 levels. anytime soon, which is a swing low and the swing high, until market states otherwise, until the positions of large players, the volumes that are coming in into the market tell us otherwise. It would be the wise idea would be to go with the basis fact that this is a ranging market. We are in a range bound context and we have to play range bound context accordingly. And in such market conditions, it's majorly directional option buyers and futures traders who would have much more difficult time in maneuvering, because once the ranges are set, this market would be more beneficial, advantageous for option writers, as the ranges are already established in the market. And that is this approach, that is a trading approach which I have been taking in the last couple of days, and which I would continue to take until I see one of the conditions which I had stated earlier to be fulfilled, either to see a higher buying than selling that has come in, or more selling than buying, which would indicate that one of the sides, one of the ranges will soon give up there. If we have a look at Bank Nifty, the context of Bank Nifty is slightly different than Nifty for now. I do not see much selling at the highs, as we saw in case of Nifty on a higher time frame. When I look at the buyer's reference in case of Bank Nifty, it is 33,730 to 33,300. Let's mark those references. So this price band is where the largest of the buyers in the up move in Bank Nifty are present. So until I see more selling coming in to the highs than the buying here, I wouldn't go with the expectation that we can take out the swing lows anytime soon. If I look at where the majority of today's sellers are present, and this is again a reference on an intraday basis only, not positional, I see that 34,760 to 34,660 is where majority of the sellers of today are present. So if at all we see any up move from here, let us say we have a gap up opening in case of Bank Nifty, then we can expect these sellers to first cover their positions. Because if we have a look at Nifty, we almost tested the extreme end of the uh, buyer's reference area, the location where major buying had happened, and then we saw a pullback. So if at all we see any positive opening tomorrow and we manage to hold off these levels, 34,660 to 34,760, then there is a chance we can see a 1.5% pullback in case of Bank Nifty. So for now, as I said, the context in case of Nifty is range bound and Bank Nifty is slightly stronger than Nifty. So in case of any pullbacks, then my index of preference to be long would be Bank Nifty. And if at all we see further weakness and we see rejections of the sellers areas and price and the index showing the signs of further down move, then my index of choice to short would be Nifty in this case, but not Bank Nifty. And as I said before, in such context where the ranges are already established, my instrument of preference would be option writing, but not much of directional future play or option buying until market gives me an indication that the context is changing. I hope this video was useful to you folks. If yes, please make sure to like and subscribe to the channel. And also those who haven't joined my Telegram channel where I share trades in live market, please do so. The description is given in the link below. See you all tomorrow. Thank you.